Assalamualaikum and selamat sejahtera. My name is Putri Nashira binti Muhammad Nizam and my matric number is H23EY870. So today I will present the financial ratio analysis for Magma Group Berhad, which gives us a snapshot of the company financial health over the past 2 years. So in ratio analysis, we focus on 4 categories, which is liquidity, activity, debt and profitability ratio. The annual report is based on 2022 and 2023 financial data, and the ratio analysis reflects financial performance and management efficiency. We can see significant improvement in liquidity. Magma now has better capacity to pay off its short-term debts and maintain smooth operation. For example, current ratio from 0.88 go to 1.68. Stronger ability to meet short-term obligation. Next is net working capital from 8.7 million go RM 38.1 million. It's a big improvement in short-term financial stability. And lastly is quick ratio from 0.52 go to 1.03. It can cover liabilities without rely on inventory.
Assalamualaikum, my name is Berhad binti Muhammad Safi'i. My matric number H23A1870. I will present the activity ratio from Magma Group Berhad. First, the asset turnover increased from 8.29 to 16.96%. Also, it looks like an improvement. It is actually due to drop in revenue rather than better asset usage. For the next, the inventory turnover is dropped significantly from 0.43 to 0.06. This suggests a very slow inventory movement and weak sale performance. And then the collection period increased from 208 day to 501 61 days. This means customers are taking a very long time to make a payment, which can negatively affect the company's cash flow. In summary, this ratio shows declining operational efficiency and potential financial strain. Debt ratio, Magma has reduced its financial risk by lowering debt. Even with a slight increase in equity reliance, it is still in a very safe zone regarding debt coverage. First, debt ratio 0.70% to 0.50. It is less reliance on debt, lower risk. Next, time interest earn ratio to 2,137 to 130. Is it still highly capable of paying interest expense? And then debt to equity ratio 0.42% to 0.74%. Is it more balanced financing between a debt?
My name is Sakina binti Zakaria and my matric number is H23A1640. Magma shows excellent margin but return on asset and equity drop. This suggests profit isn't growing fast enough compared to its capital base. In 2022, the company's net profit margin was 51.74%, and this means the company earned about 52 cents of profit for every RM 1 ringgit of sale. In 2023, the margin increased to 19.55% and showing a big improvement. This means the company became more efficient in managing costs and making profits, even though sales went down. And this is a good sign of strong financial performance and good cost control. Return on asset (ROA) in 2022, the ROA was 6.23%, but it dropped to 5.35% in 2023. This means the company earned less profit for every 1 ringgit of asset it owned. The drop shows that the company became slightly less efficient in using its asset to generate profit. However, the ROA is still positive, so the company is able to make return from its asset. Return on equity (ROE) in 2022, the ROE was 21.05%, but it is decreased to 12.55% in 2023. This shows that shareholders receive less return on their investment. The drop might be because profit decreased a bit or because the company has more equity low. Even the lower ROE, the company is still providing value to shareholders. Last one, earning per share EPS went down from 10.97 cent to 7.38 cent. This means the company is making less profit for each share that investor own. It is a sign that the company is earning less money compared to before.
In summary, Magma Group Berhad is financially strong but need to focus on tightening operational control to maintain long-term growth. They also need to improve liquidity and profitability ratio. Next, weakness in inventory turnover and receivable collection. Other than that, is high margin but declining return ROA, ROE and EPS. Lastly, is need better operational efficiency and cash flow control. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Iqmal Syamil bin Muhammad Hamdan and my metric number is H23A2393. So today I will explain a little bit about ratio analysis of Avillion SD and BHD and trend analysis of this company. So we move to the first part, which is ratio analysis. This part looks at Avillion financial performance in 2022 and 2023 using four key areas, which is liquidity, efficiency, debt and profit. The data come from official report. So by comparing both of years, we can see the company's strengths, weaknesses, and areas that need to improvement. Next is trend analysis of Avillion SD and BHD. This analysis review Avillion financial performance over 2 years using four key ratios. Now, let's move to the next part, which is the current ratio. First, the current ratio stayed the same at 1.20 in both of years. So, this means for every RM1 ringgit of short-term debt, the company had RM 1.20 in current assets stable, but not real improvement. Next, the quick ratio improved a bit from 0.22 to 0.30. Since this excluded inventory, it showed that Avillion still had very little cash or near cash to cover its short-term debts. That's a weakness. So, the lastly is the net working capital went up slightly from RM 11,531 to RM 12,503 ringgit Malaysia. So, there is a small improvement in how much short-term resources they have, but it's still quite limited.
Hi, my name is Nuri Nabila binti Muhammad Shahizan. My metric number is H23A2332. So today I will explain about activities ratio. Now let's look at Avillion's efficiency in 2022 and 2023. First, the total asset turnover improved from 0.09 to 0.19. This means the company used its asset better to make more sales. Second, the inventory turnover rose from 0.19 to 0.45. That's a big jump. They sold inventory faster, which is good sign of better stock management. Lastly, the collection period got slightly shorter, from 38 days to 35 days, so they collected customer payments a bit quicker, helping cash flow. Now let's talk about Avillion's debt situation. First, the debt ratio went up slightly from 0.41 to 0.42, meaning 42% of its assets were funded by debt in 2023. That's a small increase, but still shows growing financial risk. Next, the debt to equity ratio rose from 0.69 to 0.72. So the company relied a bit more on debt than equity to run its business. Lastly, the time interest earned TIE dropped to just 0.40 in 2023. That's very slow. It means the company struggled to pay interest on its loans. This shows serious financial pressure.
Okay, hi, my name is Nurin Khairina binti Kamar Hisham. So my metric number is H23A1575. Okay, now let's look at Avillion's profitability. First, the net profit margin dropped sharply from 28.38% to 8.10%. This means the company made much less profit from its sales in 2023, even though sales were higher. Next, the operating profit margin fell from 17.28% to only 1.25%. This shows that the core business became far less efficient at controlling its costs. The gross profit margin also dropped from 71.82% to 60.95%, meaning production or supply costs rose and eats into profit. So for return on asset ROE and return on equity ROE, both stay negative to slightly better in 2023, but overall the company still failed to generate real returns from its asset or shareholder equity. Okay, so this is the diagram for ROE. Lastly, earning per share EPS fell from 0.89% to 0.42 cent, meaning shareholders earn less income per share.
Hi, Assalamualaikum. My name is Maslinda binti Hassan. My number metric is H23A1473. Today, I will present a brief comparison of the liquidity ratios for two companies, Magma Group Berhad and Avillion Berhad for the year 2023. Let's begin with current ratio. Magma recorded of ratio 1.68 while Avillion posted 1.20. This indicates that for every 1 ringgit of current liabilities, Magma holds RM 1.68 cent, 1 ringgit 0.68 cent in current assets, showing a more solid short-term financial position than Avillion. Next, the quick ratio, which is a more stringent measure as it excludes inventory. Magma's quick ratio stands at 1.73, meaning it can cover its current liabilities using only its most liquid assets like cash and receivable. In contrast, Avillion quick ratio is only 0.30, signaling greater liquidity risk and potential challenge in meeting short-term obligations. Lastly, let's look at the net working capital. The gap is quite stark. Magma has over RM 38 million ringgit, while Avillion just has 12,503 ringgit. This shows that Magma not only has ample resources for daily operation, but also a buffer for financial uncertainties. Avillion, however, operates with a much thinner margin. In conclusion, all three indicators highlight that Magma Group Berhad is in a far healthier and more stable liquidity position compared to Avillion Berhad. Thank you.
So I will present the activity ratio for the year 2023 comparing Magma Group Berhad and Avillion Berhad. First, we look at total asset turnover. Magma Group has a very high ratio of 90.96, which show that the company is very efficient in using its asset to generate income. On the other hand, Avillion's ratio is only 0.22, indicating that their asset and underutilized and not generating enough revenue. Next, for the inventory turnover ratio, Avillion score 41, while Magma is at 0.06. This means Avillion sell and replace its inventory more often, which reflect a good inventory management. In contrast, Magma's low turnover suggests that its inventory move very slowly and may be overstocked. So lastly, the average collection period show how long each company takes to collect payment from customer. Magma takes 60.5 days, which is quite long and could affect cash flow. Meanwhile, Avillion collect payment faster in 29.2 days, showing stronger credit control and better liquidity.
My name is Nurul Syafiqah binti Mamzalan. My message number is H23A202249. I will briefly present a comparison of debt-related financial ratio for two companies, Magma Group Berhad and Avillion Berhad, from data company from 2023. Let's begin with debt ratio. Magma Group has a debt ratio of 0.57, meaning 57% of its assets are financed through debt. In contrast, Avillion Berhad has a lower debt ratio of 0.42, or 42% of its assets are financed by debt. This tells us that Magma is more leveraged and therefore possibly a higher financial risk during downturns. On the other hand, Avillion appear more conservative, possibly safer but with lower potential returns on their company. Next, we have debt to equity ratio. Magma stands at 0.74 while Avillion slightly lower of 0.72. This indicates that for every 1 ringgit of equity, Magma has 74 cents of debt and Avillion has 72 cents. These are relatively a balanced ratio, suggesting that both companies manage their capital structure responsibly and are not overly dependent on debt. Lastly, the most critical metric here is the time interest earn ratio. Magma has a time interest earn ratio of 129, which is exceptionally strong. It means the company earns 129 times more than it needs to pay interest. signaling a very low default risk. On the other hand, Avillion's bank interest ratio is just 0.14, meaning it's only earn 40% of what it needs to cover its interest. This is a significant red flag that indicating high financial risk and possible difficulties in meeting debt obligations. In conclusion, while Magma Group Berhad is more debt, it has a strong earning to support it. Meanwhile, Avillion Sendirian Berhad is more conservative in borrowing, but its low interest coverage show that a potential financial stress. This comparison underscores the importance of not only managing debt level, but also maintaining high earning for their company.
Now I will explain the profitability ratio for 2023 comparing Magma Group Berhad and Avillion Sendirian Berhad. Starting with the net profit margin, Magma record a very high margin for 90.85%, showing strong profitability as it retained most of its revenue as profit. In contrast, Avillion only achieved 10.95%, which suggests it faced higher costs or weaker pricing power. Next is the operating profit margin. Magma again shows strong performance at 90.04%, which means the company managed its operating costs very well. On the other hand, Avillion margin is only 13.1%, indicating higher operating expense compared to its revenue. For the gross profit margin, Magma stands out with an extremely higher 114.41%, which may be due to the unique revenue recognition or accounting practice. Avillion, with 23.81%, show a more normal level of gross profit.
Okay, let's begin with ROA, return on asset. Magma recorded 5.35%, while Avillion posted only 1.50%. ROA measures how efficiently a company uses its asset to generate profits. This means Magma earns over 5 cents for every 1 ringgit in asset, showing efficient asset utilization. Avillion's much lower ROA indicates underperformance in turning in asset into earnings. Okay, next on ROE, return on equity, which is reflects the return to shareholders based on their equity investment. Magma achieved a solid 12.55%, suggesting shareholders receive healthy returns. In contrast, Avillion shows a negative ROE of negative 2.59%, indicating a loss rather than profit to its shareholders, which is a red flag for potential investors. Lastly, we examine EPS, earning per share. Magma records RM7.38, demonstrating strong profitability per share. Avillion's EPS, on the other hand, is only 42 cents, indicating much lower value generated for shareholders. In conclusion, all three profitability metrics confirm that Magma is operating at the significantly higher level of financial performance and investor appeal compared to Avillion. This positions Magma as the more attractive choice for investing seeking solid returns. Thank you.